Because we want you to have that glorious pile of fuck you money. That is your freedom fund. That is your ability to control your own time, control what work you do and don't want to do. It is your creative freedom. It is your ability to rest. It's everything. So let's make sure it happens. Here's how we're going to do it. Welcome to the Sunlight Podcast. In this show, we're talking about taxes, money, and careers for creative people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, tax pro, and the founder of Sunlight Tax. If you're an artist, designer, or creative entrepreneur who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your own time and have a bigger impact with your work, you are in the right place. Hello. Oh, I am so excited about today's episode. Today, we're going to talk about fuck you money and paying yourself first. So the subtitle of this episode is How to Fund Your IRA. This is a really important episode, partly because it gets into just like some technical tax stuff, like what is an IRA? And it also gets into the more spiritual side of personal finance. Like, how do you actually make sure you do the thing that you tell yourself you want to do? All right. So let's go. Here's the scenario that I see. This is the problem. You tell yourself you want to fund your FU money. You want to put money aside for your financial future, right? You tell yourself that this is a priority, that you want to do it, but you don't make a plan. So here's what ends up happening. The tax deadline rolls around. April 15th, your taxes are due, and you maybe are surprised by how high your tax bill is. Maybe you weren't doing bookkeeping throughout the year and you did not really have a sense of what that tax bill was going to look like. So you've got a tax bill that's higher than you can pay, or, higher than you thought or budgeted for. Then on top of that, you get kind of hit in the face with a shovel over the idea that your first estimated quarterly tax payment is also due on the tax deadline. So not one bill, but actually two. Now you're like, oh, shoot, there goes all the cash in my account. So now funding your FU money, your IRA, your retirement account, suddenly all the money that you were going to put into it, which you need to do before April 15th, is gone. And you don't actually have the cash on hand to be able to fund your IRA. This is what I see over and over and over again in my tax practice. It is how people accidentally screw themselves out of saving for their future. And in today's episode, I want to talk to you about how to never, ever do this again. Okay? Because we want you to have that glorious pile of fuck you money. That is your freedom fund. That is your ability to control your own time, control what work you do and don't want to do. It is your creative freedom. It is your ability to rest. It's everything. So let's make sure it happens. Here's how we're going to do it. First of all, I want you to understand that the tax deadline, April 15th, although this year it's a couple days later because that's on a weekend, April 15th is the tax deadline, and a couple different bills all converge on that date. And what I see in my practice is that the fact that all of these different piles of money all have to go in by April 15th means that if you haven't been pretty on top of what you're going to owe and you don't have good cash flow, you don't have good cash reserves, you are going to miss out on actually putting money into your retirement account the way you promised yourself to. So what I want you to understand is that the tax deadline is your deadline for paying your taxes. You don't get an extension of time to pay your taxes ever, ever, ever. I want you to understand that you can extend your filing time to October 15th if you apply for an extension, but that doesn't extend your payment deadline. The payment deadline is April 15th, no matter what. So even if you file for an extension, you actually still owe your tax bill on April 15th. Okay. All right. So that's number one. Number two, estimated quarterly taxes. So If you work for yourself, if you are generating income from self-employment, from your own business, you must be paying your taxes quarterly. And your first tax payment for the current year, as opposed to your tax bill, which is for the year that just finished, your first tax payment, quarterly tax payment for the current year, is also due on the tax deadline, April 15th. So these are two different bills due on the same day. Okay. You really need to understand that. Now, third, this is the one that is your FU money, right? I like to call your retirement funding FU money because that's what it is, right? That is due also on the 15th. So IRAs have an April 15th tax deadline date for you to put the money in. Also very important for you to know, the IRA does not get extended. You don't get an extension of an extra 6 months to put money in an IRA if you file for a tax extension. So I want you to understand this is something you do need to do by April 15th. All right. So what should you do? How do you actually fix this problem? Well, first, it helps a lot to have an ongoing sense of how high your tax bill is going to be for the year. Okay. In order to do this, you really need to have bookkeeping. Okay. When you work for yourself, when you are generating income through self-employment, through your small business, you simply need bookkeeping to have an ongoing sense of what your profit is, because your profit is what you are taxed on. Okay. So that is basically your taxable income. Now, there's other income in your household, like, for example, your spouse's income. And maybe you have even other income like real estate or capital gains, right? So there's other income also that will pile on and be included in what you get taxed on, right? So your business is not the end of the story, but if it's a large chunk of the overall household income that you have, then it's a big part of the story. Okay. Now, to get a sense of how these numbers all combine together in your specific situation, what you really need to do is you need to look at last year's tax return. That is your biggest clue about how your taxes are going to go this year. So you might not be a tax expert. And if you're listening to this show, you probably aren't one, right? That's why you're here. So, but looking at last year's tax return, you can get a sense for, oh, my income is higher than it was last year, or it's lower than it was last year, or, oh, my spouse got that bonus, so it's going to be this much more, right? So you can see what you owed last year based on last year's income. And you can probably, even with just intuition, understand if your income for this year is going to be higher or lower. Okay. So even if you feel like you have almost no basis for making a judgment, you do actually have some basis. You can look at last year's taxes and you can just gut check. Is it going to be higher or lower or about the same? Okay. So pull out last year's tax return. That's going to give you a sense of what you might owe this year. It's not going to be exact, but that's okay. Now, second, your estimated quarterly taxes. When you're making income from your own business, you are going to need to pay taxes quarterly. This is the rule. This is the law. So the point of estimated quarterly taxes is to pay your taxes throughout the year to stay ahead of your tax bill. This is actually great because if you are doing this correctly or even close to correctly, and believe me, perfection is not the aim here. The goal is just to get somewhere close. It means you're generally not going to have much of a tax bill, right? If you paid your quarterly taxes every quarter in approximately something close to the right amounts, it should mean you've prepaid your taxes for the whole year. So you should just have a little bit of settling up to do at the time of your tax filing for April 15th, and it actually won't be a very big bill. So being on top of your quarterly taxes is going to really help you have the freedom to have money available to pay into your IRA, into your retirement fund. Let's call it fuck you money, because that's what it really is. All right. P.S. If you're scratching your head as you hear me talk about estimated quarterly taxes, I want you to know I just recorded not one, but 2 episodes about quarterly taxes. So you can go back and listen to those. Those are just 3 episodes ago, episode 1 and episode 2 on estimated quarterly taxes. So go back and take a listen. Okay. So what I want you to do is I want you to set aside the full amount of money that you are going to put into your IRA. okay, as early in the year as you can. If you're listening to this now, I'm recording this in February, so just 2 months ahead of the tax deadline. But you can do this at any time throughout the whole year. In fact, if you just want to look at the allowable amounts that you can put into an IRA and just budget that monthly, that will help you be in a good position all year long. Okay. So I often give the example of $6,000. That's the amount you can put in. If you're under age 50, you can put $6,000 into an IRA that will retroactively count towards your 2022 taxes. Okay. That's the one that's going to go on this year's tax return. All right. So that's why I'm giving you that limit. P.S. The Secure 2.0 Act, which I will do a future episode on, don't worry, actually raised the limits for your IRA starting in 2023 and onward. So actually, the good news is those $6,000 is the relevant number for you right now doing your 2022 taxes. Moving forward, next year, you're going to have even higher limits. So this is really, really awesome. Anyway, stay tuned for the Secure 2.0 podcast episode later, where I'm going to talk about how those limits have changed and increased. Basically, it's an awesome thing because you're going to be able to put more money aside for yourself. So I want you basically to put aside the money that is going to go into your IRA. We can call it $6,000 as a baseline. You don't have to wait until April 15th. Okay. I want you to act like that money is already spent, right? And then budget for how you're going to pay your tax bill and your estimated quarterly taxes. Okay. The concept I am illustrating here is called pay yourself first. This is actually a pretty well-known principle in personal finance, but it's a good one, right? When you pay yourself first, like that's actually a priority, then the other stuff kind of falls in line. Of course, you're still going to pay your tax bill. You have to. Of course, you're still going to pay your quarterly taxes. You also have to. But then you will fill in the rest of your budget around the little daily expenses that you incur, that you will fill those in around your bigger priorities. The idea here is that articulating to yourself that it is a priority to you to put the maximum dollar amount you're allowed into your IRA and making a plan and setting aside that money early and first, it allows you to do it. Because what happens when you don't set it aside and you don't pay yourself first? Well, then you get hit with that tax bill and then that estimated quarterly tax payment, and your cash is gone and you simply don't have the money to fund your IRA. And if you don't learn from your mistake, you can keep making this mistake year after year after year. And what does that mean? It means you are just never funding that retirement, even though you might promise yourself you're going to every single year. Okay. So paying yourself first. And listen, I know you may have been socialized to believe that this is a terrible thing, that it's selfish and awful, but I'm telling you, I am here as a tax fairy to give you permission. Please do this. It's good for you. It's good for your spouse. It's good for your children. It's good for your aging parents. Having financial security for yourself is like putting the oxygen mask on yourself, right? If you've been on an airplane, you've heard that overhead announcement, right? Put the oxygen mask on yourself before you put it on others. I love everyone who is listening here. The whole point of what I do is that I'm trying to teach generous people how to manage their money. And a lot of times, generous people really struggle to be generous to themselves. I just want to give you permission, okay? So I hope that you will do it. Pay yourself first might feel a little aggressive to you. It might feel selfish, but please channel me when you do it and be like, Hannah told me to do this. I'm going to do it. Okay. Awesome. You can benefit from my bossiness. So the whole point of paying yourself first is that it actually makes that priority happen. If you don't pay yourself first, what most people do is they pay themselves last. They pay themselves what's left over after they've paid everybody else and for all the other things in life. And basically, whatever's last on your priority list isn't going to happen, right? That is just a fact of human existence. So if putting money into your retirement is a priority at all, it has to go up top on your list of priorities, or else it isn't going to happen. Okay. I hope I'm kind of just helping you reverse your thinking a little bit on this. Okay. I was just teaching the math just yesterday because I did a masterclass. I was just teaching the math about how retirement really genuinely is possible by putting away just $6,000 a year if you are benefiting from annual compound interest, which you do when you have your money invested. And yes, that means investing. That means the stock market. It does. But it is only possible to do if you give yourself a long enough time horizon. Ideally, you want about 40 years. Now, I know that that might seem impossibly long to some of you. If you're listening to this and you're in your 40s and you haven't started yet, don't freak out if you're starting late. You are pretty normal. And that's actually why the Secure 2.0 Act so generously extended the dollar amounts that you can put in starting in 2023. But if you don't have a long time horizon, the only other lever you have to push is more money. So you can put in small dollar amounts if you're going to be consistent over a long term. But if you don't do that, you're going to have to put in more bigger dollar amounts if you're going to shrink the time horizon. All right. You've only got those two things to work with. You've got time or you've got bigger dollar amounts. You can kind of pick and tweak it. Don't freak out if you're starting late. You are normal. And I also want to say that I use $6,000 as an example because a traditional or Roth IRA is something that most people have access to. Almost everybody listening is going to be able to put money into one of those two kinds of accounts. But I want to be clear. There are additional retirement accounts that you have access to when you work for yourself. There's a SEP IRA and there's a solo 401k. Those each have their own special rules, but they can, given you having enough income, have much higher limits for you to put money into them. And so I just want you to be aware that you do have options where you can put in quite a bit more money. Okay. So don't look at the 6,000 number and be like, oh my gosh, my time horizon is too short. I will never make that work. Okay. That might be true if you're getting a very late start, but there are other methods where you can put away quite a bit more money. Okay. Awesome. So like I said, in a future episode, I'm going to teach you about the Secure 2.0 Act and how those limits have increased. We'll talk about catch-up contributions in that episode. So we'll get you on track if you are feeling like maybe you're behind. And don't worry, honestly, everybody feels like they're behind. I think I'm pretty on top of it. And I still wish I had done so much more 20 years ago. Also, if you're listening to this and you're in your 20s, oh my God, everybody else listening to this podcast is so jealous of you right now. Please take advantage. Please fund your IRA every year because you have that magical timeline that all the rest of us are just positively drooling over. Okay. So of course, in Money Bootcamp, I do teach a whole module about the various tax advantaged accounts that you can use, like the solo 401k and the SEP IRA, and what those limits are. You can look them up. That's perfectly accessible information on the IRS website. But, there's a little bit of strategy that you want to employ choosing your different accounts based on deadlines and limits and how much you're making through your business versus through other means. So there's a little bit of strategy in combining these different kinds of accounts. But this is definitely enough to get you started. And that is the whole point. So I want you to set aside at a minimum, the biggest dollar amount that you can into an IRA or one of those other kinds of accounts if you already have access to it. Okay. I also want you to just realize that waiting to put money into your retirement, it really costs you. I actually did a whole episode about that. It's episode 17. So you can go back and listen to the math about how much waiting actually costs you. It's pretty eye-opening. And I hope my purpose in doing that is definitely not to make you feel bad. Please remember, you are absolutely normal, but it is really just to motivate you to make it a priority as soon as you can and get that money in there. All right. Okay. Let's talk about the takeaways. So if you can get your taxes done early so that you know how much you will owe on April 15th, both for your tax bill and for your first estimated quarterly tax payment, you will be in much better shape and you'll have a little time still left to plan for that cash that you're going to need to come up with by that deadline. Okay. So I want you to set aside your IRA money right now You can even put it right into your IRA already. You don't have to wait till the tax deadline to put it in. You can put it in now. And actually, you are allowed to withdraw that money back out again if you accidentally use the wrong type of account. Maybe you do your taxes and you realize you prefer to put the money into a Roth instead of a traditional IRA. You still have time to move that to the other kind of account all the way up until the tax deadline, if you happen to need to change your mind, or if doing your tax return brings up some information that is relevant and that changes your opinion on this. Okay. Now, I want you to forgive yourself if this year you can't do this as perfectly as you wish you could. Okay. Perfection does not exist and it doesn't ever happen. Okay. Being mean to yourself, being cruel to yourself because you didn't get it quite right, it just doesn't help. Okay. So I just also want to be the tax fairy here to tell you, like, please be kind to yourself. You've got to forgive yourself. All right. Here's what I want you to do. If you are experiencing the feeling of, oh God, I'm just completely like that nightmare scenario you painted, like, I'm surprised by my tax bill. I'm surprised by my quarterly taxes. I don't have the cash left to pay for my IRA. Okay. I hear you. I see you. Okay. Here's what I want you to do. I want you to aim for improvement. All right. So if this year you're unable to put all that money aside that you wish you could, I want you to take the lesson from that and put some notes into your calendar for next year. Okay. For 2023, put notes into your calendar at the appropriate moments about what you wish you had been able to do this year so that next year at this time, you're doing the thing you wish you could do now, which is fully funding your IRA. Okay. Because guess what? Next year, it's going to come. It will be here. And future you will be so grateful. I hope that helped you all, everybody. Listen, speaking of grateful, I am so grateful for your feedback. I am trying to make this podcast as valuable, as actionable, as wonderful for you as it possibly can be. But guess what? I can't know what that is unless you tell me. So will you tell me? You can send me a DM. You can share a podcast episode of mine on Instagram and tag me. I am always so grateful for that. And tell me what your top takeaways were. I love hearing what strikes you, what's valuable to you. And honestly, I wouldn't know if you didn't tell me, because I know a lot of this stuff and I don't know what you don't know. So I don't know what's helpful to you. So I'm just so grateful if you will share this podcast with other people, but definitely just tell me, like, this really helped me. That really helped me. I love it when you give action tips. Or maybe that's not how you feel. Maybe you say, like, I really need the mindset stuff. I really like it when you talk about being nicer to myself, right? Whatever it is, tell me and I'll do more of it. Okay. Because the point of this podcast is not so I can sit alone in my office here and talk to myself. The point is so I can serve you. That is what I want to do. All right. Thanks so much, everybody. Also, listen, if you are doing your taxes right now, if you're kind of struggling and you're feeling like, oh God, it's that time. If you don't have my visual guide to your tax deductions yet, why don't you go ahead and take a minute and download it? It is for one thing, it's beautifully designed. It's really visually pleasing. It has all the tax rules that you need to know in order to get every tax deduction. So go ahead and download that now. Just take a minute. It's at sunlighttax.com/deductions guide. If you go there, there's 6 different versions. You can pick the one that fits you the best and print it out. It is a 1-page reference that you can just pin up by your desk, and you will have it with you as you're doing your taxes to help you catch every last deduction. That is a service I really care about delivering to you. So thank you so much, everybody, for listening to another episode. Definitely tell me what was valuable to you. I would love to hear it. And I will talk to you on the next one. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review. It really helps, and share it with a friend. I'm so grateful. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links we reference at sunlighttax.com/podcast.